Hello guys, what's up? Hope you guys are doing well. Wishing you all happy new year. Let's learn and grow together. In this video, I will explain a trade which I took in November month, and the name of the stock is Inox Wind. I will spell the name INOXWIND. This trade is based on price action and volume, and no indicators or no other technical other stuffs and all. No, nothing is used. Only this trade is based on price and volume, and the stock delivered 140% in 8 weeks, which is a stellar return. And I will explain all the nooks and corners, how I entered this trade, how this trade went this good, and everything in this video. Learn how this trade works, and further you can execute this type of trades in your trading career. Okay, let's enter into the stock. You can see this stock. The stock is Inox Wind, INOXWIND, Inox Wind. Why I took this stock? First of all, why I took this stock is because this stock was in a strong range for around 4 to 5 years, and it was consolidating in that range. Okay, you can see it was consolidating in that range. Let's go to the weekly time frame. It's easier for us to see. It was consolidating in this range, around this range for around 4 to 5 years, and then it broke out of this range. And see, from here it gave around 100% move, and these moves are backed up by volume. See, all the up moves are backed up by volumes. These big volumes are not created by retail traders. These are the volumes that are created by institutions. So institutions are the peoples who are with a large amount of money, and they are trading in these stocks. And what I did was I was watching this uptrend, and I left the stock, and it was in my watch list long. And what I did was I was tracking this stock for a long time. It was all started to consolidate for a long time. And let's put 20-day moving average, and it was taking support on the 20-day moving average, and it was hovering around this 20-day moving average range, and it was consolidating for around 3 to 4 months. And in the month of October, the stock was having the highest volume in the past 3 months. And see the volume of this candle, and see it is very high in the past 3 months. And during this consolidation phase, the volumes was very low. So what you can decide from here is, during this strong up move, the institutions are supporting with volumes, and during consolidation they are just keeping quiet. And after the consolidation has come to an end and it's ready for the next move, next step of rally, the volumes are started to coming in. Then I started to monitor the stock carefully, and what found is, for the next 4 to 5 days it was consolidating in a very tight range. You can see here this type of tight candles, 1 2 3 4. These four candles just convinced me to enter into the stock, and I was waiting for a proper entry with proper risk management. And these tight candles reduced my risk very less, and I can enter with a big size. And I kept an alert in this range, and I was watching the stock. And on November 6th, this stock opened with a gap up move of, this day's closing range was 204.65 rupees, and this day's opening range was 216 rupees. So it was around 0.5% to 7% gap up open, and I entered here with a stop loss of around, I will just plot it. Wait 1 second. This is my entry, 217, around that range, 217, and my stop loss was around 2 to 2.3%. And my stop loss was very tight, and due to the very tight stop loss, due to the proper risk management, I can push in big in this trade. I can push in big in this trade. And what happened? See, on the day it moved 11.11%, and it closed above all the ranges, and it is followed up by very huge volume, which is institutional volume. And my entry is proper here. Then after for 4 to 5 days, it started to consolidate, and then gave a move. You can see, and then it started to go up, consolidate, and then gave a move, and again it started to consolidate. This started to consolidate. Let me remove this. See, it consolidated, and it takes support on 20-day moving average line. This is the line, and it takes support on 20-day moving average line. And next day it opened gap up again from this range. So here is an addiction area where you can add to this trade. From here it moved around to 20 to 20 to 15, 15 to 20%, and here you can add your next buy. And if your next buy triggered and it moved around 7%, and then the stock started to move up. On the consecutive days it was moving up. There was around 1 to 2 to 3 days it was in minus. On all other days it was up. See how the stock moved. See the move. Every big moves, big candles, which is around 5 to 7%, is accompanied by volumes, which is institutional volumes. See the volumes here. See this candle and see the volumes here. See this candle, see the volumes here. See this candle, see the volumes here. And everything is backed up by volumes. So there is strong institutional supply in the stock. And the stock went drastically up without cutting the moving averages or consolidating for more time. The stock is drastically up. And it let's calculate how much it returned. From here, this is the move. From here, it has gained around 142% within 58 days, which is around 7 to 8 weeks. This is the move stock gave. 142% in 8 weeks is not easy, guys. This is a stellar move, and some stocks will do great like this. And why I basically took this stock particularly is because this stock is from a emerging sector, which is energy sector, and that too convinced me to enter this trade with a proper size. Just by watching the price and volume action, you can identify these kind of stocks in the further market. Let me explain how I entered and what the mistake I did and lost this move. I was keep on watching, and I said I was trying to enter here. I entered at a proper price of 217.1 rupees, and my stop loss was around 2%, and I sized very big in this. And the next day, on that day, it blasted 11.1%, and my stock and my position is up, and it started to consolidate. My stop loss is here, and after this big move I moved my stop loss to here around this 220ish range, okay, below this breakout range. And next it started to consolidate. I didn't add here. It started to consolidate, and then it went up and started to consolidate. And on this day I was tracking this 4 days, and it is trying to take support on 20-day. What I did was I had to move my stop loss and keep my position risk very small and protect my cap gains. Okay, basically what I will do is I will keep my stop loss below. You visualize this area. This is the area, and this day I was setting moving my trailing SL from here to here, and I was planning to move my trailing SL to 234ish range, this range, around this range, 233 or 34ish range. But unfortunately, while I'm entering my stop loss in my Zerodha account, I unfortunately entered 244 rupees, and I didn't notice that. Next day, it was trying to take support on 10-day, 20-day moving average line, and hit at my trailing as well. And I didn't notice that. I kept an alert above this, and I kept an alert below this. So my alert didn't trigger, and I doesn't know. While I'm trying to watch, I was stopped out on this, and I analyzed what I did was for placing order for placing moving my trailing SL to 234 rupees. I mistakenly placed my trailing SL at 244 rupees, which hit my trailing SL. And see how it moved. It moved 100, around 100 and 140% from my mistake area. I only gained around 15% in this trade, which is very good. I'm not worrying about it, but still, it was a major mistake from my side, which would have impacted to great 140% move, and I missed this move. This would be my best trade of my year in my trading career if I had catch on this move. It's okay. You have to learn from your mistake, continuously learn from your mistake. There are multiple setups will be forming like this in the future. So you can take those setups by learning from these mistakes and executing it that properly with proper risk management. Just entering in a stock alone is not trading. Entering a stop, your setup, your stop loss, your trailing stop loss, your risk management, your push and sizing, your mindset, everything is crucial. I missed one thing, which is trailing as well in this trade, which led to a loss of 140% gain. I missed this gain. This is trading. Trading is all around what I said: setup, entry, stop loss, trailing as well, risk management, push and sizing, and mindset. It is a bucket. You have to master all this, and become expert in trading. In my Twitter account, you can check my Twitter account, which is the link is in the description. You can check that, and you can review my trade updates there. How I entered this trade, where I kept my stop loss, where I exited this trade, and everything is journaled in my Twitter account. You can just go there and follow my account and just view this trade and all other trades which I took regularly. And do follow, guys, if you like it. Further, many trade updates, potential setups, and other stock trading information will be posted there regularly in my account. So do follow, guys. And if you're really serious about trading and want to learn something and do something in trading, don't hesitate to learn. Always learn from your mistakes. Keep on trading, learn from your mistake, set your mindset, have a proper setup, define your risk management rules and everything. And you can achieve, guys, if you're really serious about it. And if you want to learn trading, you can join my Telegram trading group, where you can discuss how to trade, and we will also discuss charts and other risk management rules and other things. And further, we will conduct live sessions in the weekends freely, where you can learn about price action, volumes, risk management, mindset, and everything. And this everything is free, guys. If you're a college student, you can directly come and join in my trading group. This is my Twitter account, guys. You can join here, and all the links are in the description of this video. You can make use of this and learn. That's it, guys. Be positive, focus on your goals, believe in it, and keep learning. Thank you, guys. Meet you soon in another video. Thank you.